So, welcome to Northern Powerhouses, our business success stories series of interviews, where we discuss with local business leaders their backgrounds, their successes, their challenges, and what's really driving them forwards. And this afternoon, I'm delighted to have with us Craig Richardson, who's director at PhD Industrial Holdings. So, firstly, Craig, thanks for coming on board and spending some time with us. And if you'd like to introduce yourself, PhD Industrial Holdings, what you do, how you help people, that would be wonderful.
Yeah, fine. Yeah, no, thanks, Chris, for this opportunity. I do enjoy listening to podcasts, and I've done the odd one occasionally over the years as well.
Brilliant.
So, Craig Richardson, director of PhD Industrial Holdings. So, we're a holding company that buys SMEs. So, we can buy anywhere between 51% or 100% of a company. They're likely to be B2B type businesses, likely to be manufacturing, but not definitely. Profits are likely to be 500,000 to 2 million. We can facilitate management buyouts. So we've got a corporate structure as opposed to a PE structure, which means we can keep businesses longer and help them grow organically and by acquisition. And we've got six subsidiaries. Prior to that, I was an advisor for a number of years, and over the years we've bought 18 businesses, I think it is. We've sold eight, and we've got six subsidiaries, and they themselves have got four subsidiaries, so a collection of 10 at the moment, and we turn over about 65 million.
Wow, brilliant. That's a varied portfolio, I would imagine, in terms of
Yeah,
certainly different
it is.
businesses. And you mentioned a couple of things here. Is well, one question is what would make a great company to buy, I guess, whether it's the company or the people. And
Yeah.
a follow-up question I will ask you is what would you say the key difference is between 51% and 100%? If that makes sense. You mentioned you
Yeah,
could
no,
buy
no,
anything from 51 to 100. What would make the difference to the person that might be interested in talking to you?
sure. It's a good question, actually. What does a good business look like? A good business is one that adds value to the supply chain. So it's typically a business that's got a gross margin of more than 40%. And if it's less than 40% and towards 20% and less, it means they're just box shifting and they're just trading on price, really. And the issue is that a customer will just shop around to get the product because it's probably an undifferentiated product. The companies we acquire have probably got a product that's a component or a part in a bigger supply chain, and it's quite an important part, quite a small part, and quite a small part compared to the overall cost of the final product. So, for example, we sell cable that goes into yachts. We sell sealant that goes into electric vehicles, and obviously a yacht might be 2 to 10 million. An
Yeah.
electric vehicle might be 20 to 100 grand. It doesn't really matter how much the cable or the sealant is because it's only a small part. But when you're in the middle of the ocean, you need to make sure your cable doesn't crack.
Yep.
And when you're on the motorway, the sealant doesn't go, and that's
Yes.
why. And there's a lot of IP around it as well. So it's hard to describe the companies we like and what we don't like, but we're pretty good at once we see a company putting it in that category or the other category. And in terms of your second question about the difference between 51% and 100% for someone, well, typically we're buying a business from a founder or son or daughter of founder, or maybe a collection of individuals. Some businesses they set off by thinking they're going to sell and run off into the sunset. But a lot of business owners, as you'll have come across, the business is their identity and it's their
Yep.
proverbial baby. And they don't want to go from being 24/7, 100% down to zero. They
Yes.
like a approach. So some people still want to do that and we can acquire 100%. But some actually either want to buy one shareholder out and want to keep their own shareholding or reduce their shareholding a bit and buy
Yep.
another shareholder out. So that's why 100 might go down to 51% or 60 or 70. But the benefit is that they keep a retained stake. And if we can help the business grow organically or by acquisition and by helping them with sales and marketing and digitization and things like that, they will get the benefit in their
Yes.
share value on a future exit.
Yes. Brilliant.
So that's that. So when people want to sell, they don't actually necessarily want to sell. They want to sell to take a load of cash off the table,
Yep.
so that them and the family are sorted for life. But they also wants to, I suppose, roll the proverbial dice again to see
Yeah.
if they increase in the retained shareholding. So we can do a mix and match, and that's the benefit of us actually. We're more flexible than a trade buyer because a trade buyer will just want to buy 100%
Yeah,
and might be a competitor, and you've got to open your books to them.
yeah.
And on the other side of the fence, you've got private equity, and private equity really just wants a really growing company with a complete management team. We don't need it to be growing, and we don't need a complete management team because we can headhunt and create a management team to take it forward. So we're prepared to roll up our sleeves.
That's fascinating. No, it's really fascinating those differentiations, because I think, I mean, one thing we do from a coaching perspective, very much the coaching part, is I try to get we try to get our clients to a point where they can see their business as a game, and
Yeah.
by that I mean take the emotion out, because it's very emotional, and I can see that and I can see that being able to cash out some of their equity to create safety allows
Yeah.
you, as you said, roll the dice, which I guess is literally the game analogy is now it becomes we can
Yeah.
play. We find people play when they play better, they act better.
Well, exactly, because what we find is with a typical owner manager, they may have set the business up themselves, and
Yeah.
by de facto, they are employee number one, doing absolutely everything. Then they employ somebody and give that person some things to do. And then they might employ 5, 10, 20, 50 people, 100, whatever it might be. They'll
Yes.
still keep some roles themselves. One, because that's what they do. But secondly, it's an element of control. And what we find Pareto's law, 80% of what they do can be done by somebody else quite easily, but they just do it because they're the owner.
Yes.
Um, and it's that 20% they actually enjoy. And it's the
Yep.
20% that they were able to spend 80% of the time doing on day one, which created the business opportunities, got them where they've got to now. So if we say to them, look, if we can take that 80% away from you and give you a load of cash, would you like to carry on 2 or 3 days a week? Oh, I'd love that. And
Absolutely.
the thing that stresses them out is they've got all their eggs in one basket.
Yeah.
And secondly, the book stops with them. Even if, the middle of the night and the alarm goes off, they might have to go and
Yeah.
sort it out. We take all that away from them and just say, look, just concentrate on the bits you like, which are the relationships, the building new customer relationships and selling and being an ambassador for the company. Sit on the board with us as well and
Love
have a
it.
return stake. So hopefully a sort of win-win really.
Love it. Yeah. Well, it's something we work on with our clients is what we call, when we're looking at their time, is what we call the skill fun matrix. So we get them to record the time and then allocate level of skill, low, medium, and high, and level of
Yeah,
fun, low, medium, and high.
yeah,
And it's the virtuous thing and the profitable thing is to move up towards high skill, high fun because that's high value
yeah,
normally. And
yeah,
there's so much time where people are doing low skill, low fun, doesn't, and again, low cost. So recruiting someone at 15, 20 pound an hour to do a whole bunch of
yeah,
stuff. And,
yeah,
and, and it's often, as you say, the 80/20. They're only spending 20%
yeah,
at max up here,
yeah.
80% in stuff other people could do, which is just logically seems nuts.
Yeah, and they
Um,
wonder why the top line's not growing because they haven't got the capacity to have those conversations.
I literally have a conversation today about that very thing where I find most owners, founders, directors, they say, "Yeah, I do my best thinking when I'm walking the dog or in the shower," and I go, "Well, okay, but where are you allocating time during your normal working day? Because
Yeah,
that's your job to
yeah, yeah.
think about the future." And yeah,
No,
it's a side thought when I've got time, which is
yeah,
nuts, surely.
yeah, yeah.
Um, the other thing I just want to just cover on because what you said, I've never heard somebody say this, which was if in your models, if gross margin is below 30%,
Mm.
it's a low value add business, which I'd never just, and I know it isn't always, but it's a really interesting way of looking at that. Could you just tell us a little bit more about
Yeah,
that?
it's a generalization, and you
Yeah.
could say, well, hang on a second, Tesco's
Yes.
net margin is only 2% and
Yes.
they do okay. But they've got volume. Heinz,
Yes.
beans are the same
Yeah.
thing. The
Yeah.
margin is very, very low. I'm talking about smaller businesses really. Because obviously when you scale, if you get a business that's doing 20, 30, 50, 100, 200 million, naturally your margin, your gross margins will go down because of the volume.
Yeah.
So I'm talking about sub 10 million turnover businesses. And my view is that if your margin's less than, I know I mentioned 40 and you mentioned 30, and it
Sorry.
can be No,
I
it's
mean,
fine
yeah.
because actually it depends whether, without getting technical, whether you include labour in there and whatever.
Yes, I was going
But
to ask
but
that question. Yeah,
but the concept of let's say a business where its gross margin is less than 20%, I think it's trading on price and it's just buying product in and
love it.
selling it on. And the value it might be adding might be, well, we buy it in bulk from the Far East and we break it down and sell it to our customers because they can't go direct to the Far East. And that's a reason for them being. And I totally get that. The issue is there's probably a few similar companies doing it, and therefore the customers have got choice. And it's
Yeah,
really so in a way, we call them price takers. They've got to take the price that the customer wants to pay.
got
Whereas
you.
if you've got some IP, and the IP these days, it's not a patent. It might be it's probably not a brand even because we're not all Apple and whatever, but it's probably know-how and
Yeah,
design and accreditations. If you've got that and you've got some a moat, as Warren Buffett would say, and some differentiated factors, then you're a price maker. You're
yeah,
saying to your customers, look, if you want to buy my product, this is the price because you can't really go out elsewhere. Now, obviously, they can go elsewhere because at the end of the day, these businesses aren't unique. If you want to buy an Apple phone, you've got to buy an Apple phone. You can't not buy.
yes,
You can buy a Samsung one, and that's
yep,
fine. But if you want an Apple one, it's an Apple one, and
yep,
there's different places to buy them. But it's Apple at the end of the day. Now, with our companies, we always say the businesses we want to see are ones where the customer switching costs are hard.
great.
So our chemical business, for example, it manufactures chemical for brand owners. So it's not a brand. It will make a formulation and sell it to that brand owner, but it keeps ownership of the formulation.
Yeah,
Now, the brand owner could say, I want to go somewhere else because I want a cheaper price. And they could do that, but they've got to audit the supply chain, look at the traceability, does the
yeah,
product work, and all that kind of stuff. And at the end of the day, it's a big risk for them moving.
yes,
Now, obviously, we can't take the mickey and keep pushing the price up and up and up and up, but there's a happy medium. And the best relationship between a buyer and a seller is that symbiotic relationship where the buyer needs the seller and the seller needs the buyer. And your supply and demand curves, you end up with the right price. But that's me sort of, I've never thought about it like that, but downloading
yes.
on what makes a good company and what makes a not as good company.
No, it really fascinating for me because I guess I think we come of it from almost the other end of that, which is helping companies identify their USP, their points of difference, and yeah, as you rightly say, very few businesses actually are unique. So,
Yeah.
but a combination of points of difference can be unique, if that makes sense, three or
Yeah,
four. And
absolutely.
and the thing we often say, which sort of supports everything, is if we because it's not just it's having them, but it's also communicating them because a lot of businesses have points of difference, but they don't
Yeah,
market or publish them. And
yeah.
the thing we always say is if your clients don't know what makes you different, then
Mm.
the only comparison is price.
Absolutely. And we were just having a meeting just then actually. The best companies are the ones where they don't do any sales and marketing. The website, they haven't updated the website for years,
Yes,
and they're the world's best kept secret.
yes,
And also, you've got companies that just sell on the features of their product rather than addressing the pains and gains of potential customers. But if customers don't know about them, they're never going to find them, and they wonder why the phone never rings. Because
absolutely.
if you type in a long tail sort of phrase into Google and they're on page 32, then they're never going to be found. So we can help companies like that. So
Brilliant.
fundamentally, again, going full circle, we like companies that have got a good market position and a good product, and they may be poor in sales and marketing, but that's something we can help them with, as you do.
Brilliant.
It's easy to sell, or it's easy for us to sell a good product, a differentiated product than a Me Too product, of course, because I come back to, with
Yeah,
I got an information memorandum this morning for a company that looked really interesting until I saw all it did was sell all its product through eBay, and they were just products you could get anywhere. And I thought, it's quite tough that tough,
yeah.
it's a tough ask.
It,
Um,
they may have a niche for a period, but yeah, as you
yeah,
say, ultimately, funny if you mentioned yachts earlier, I work with And this is going back 10 years, and this was just a good example of I think what you've just said was they they provided what I'm trying to think what the word is because I had two clients. One would do designed rugs and carpets for luxury yachts, so proper like that. And then the other business I worked with provided what all the soft furnishing, so
Okay.
the cushions, the covers, but also things like tableware, glassware. And
Mm.
it was about sourcing things, but because it was very high end, it was Italian. I don't know if Italian marble's the right thing to say, or Italian glassware, or it was very specialist. But ultimately, over time, they were degraded by the fact that people could find these things online, and
Yeah,
although their niche initially was their knowledge and expertise and contacts in,
yeah,
I think they had linen made in Nepal. It was
yeah,
literally, and but over time, all these contacts disappeared because you could find them online and they could market the manufacturers could market online. So yeah, it's important that we continue to redefine our points of difference over time.
yeah.
Yeah,
And the internet changed everything. I think AI will change everything again. And
yes,
another good example actually is an engineering company. So somebody said to me the other day, "Would you like to acquire this engineering company?" And I said, "Well, it depends if it designs the products or whether the customer designs the products and just says, 'Can you make to my plan?'"
yes,
And unfortunately, it was the customer's plans, and they just, they were very good at what they did.
yeah, yeah,
But at the end of the day, the customer could just take the product somewhere else to get made. Whereas
yeah.
if it was designing the product, then the customer would have to use them. So again, another subtle difference, really.
And what you've just said then, just going back, because I'm really, this is, it has a light bulb in my head, is it's likely that sort of business will have a lower gross margin because they're not
Yeah,
adding enough to the
exactly
process.
that,
They're,
exactly that,
they're just
exactly
producing.
that,
And
exactly that reason. Yeah, yeah,
cool.
exactly that reason.
That's really fascinating. It really helps me, but also for me, and I guess with you, when you go in and you see that they could have adding value and therefore higher gross margin, that's where the magic can happen for you as investors and me as a business coach is like
Yeah,
there's an opportunity here. You're competing at price rather
yeah.
than on value of what you could possibly deliver.
Absolutely. And the other thing, of course, is that the higher the margin business, the less you need to grow the top line to increase your bottom line, just
Yes,
mathematically. And
absolutely.
I think the point you're alluding to there is there an opportunity for to convert an undifferentiated product into a more differentiated product? That's usually quite difficult. Apart from a good example is our cable business. At the end of the day, they make cable, so they buy the copper in, they coat it with compound, looks like any other cable. What we did, we acquired 51% of that business for the reason I just talked about before. So
Yes,
Peter, the founder, is still on board. But what the new management team came on board to do was they did two things. They branded it, and secondly, they got it accredited for different markets. Which all of a sudden, same cable. It just so happened the quality was good enough. It's accredited and now it's branded, which takes them into different sectors and enables them to pay to charge premium pricing because it's created. So that's a rare example of how you can change a business model to the advantage.
now, I was told the story, and I'm not giving the world of AI checking everything we say. I'm pretty sure it's true, and it might not be the right brand. But have you ever heard the story of the origin of ice beer? If you remember,
No.
do you remember Foster's Ice? Go back 10,
Yeah, yeah,
15 years,
yeah,
ice beer,
yeah.
and apparently it was first created in the Hahn Brewery in South Australia, so it was an Australian idea. And they brought on a marketeer, and he said, "Well, I'd never been worked in the brew industry, so could you?" He went to the master brewer and said, "Could you just take me through the process? I'm really interested, fascinated about what you do, and it'll help me market the brewery better." So they said, "Great." So the master brewer said, "Go in here, we put the ingredients in, we boil it all up, and then we pour it into here, and da da da." And then he said, "And just before we bottle or can it, we put it through an ice filter." Because apparently filtrants come out of the liquid better
Mm.
closer to zero. You get a clearer liquid by the close. And the marketer went, ice beer, ice filter, ice. This is in Australia at 40-degree temperatures, and
Mm.
so he and but the brewer said, yeah, but everybody does it.
Mm,
And
mm,
the marketer said that's fine, but nobody tells the client. So
yeah,
they
yeah,
they created an ice beer, told the story, ice filter at
yeah,
0 degree, and did everyone catch up eventually? Absolutely. But
yeah,
the sales went up sort of 34%
yeah,
in the first 18 months while everyone else was catching on.
yeah.
And
Absolutely.
I
Yeah.
think it's interesting, just sometimes actually, although it isn't different, telling people something is not necessarily unique, but just selling the story can be valuable.
Yeah, it's not. So we always say, we're not selling a product, we're selling a solution. And,
Yes.
and if you look at the marketing of Automarine Cables, great example. If you look at the marketing on LinkedIn, it's got lots of racing yachts and things like that because it's in there. So that you're not going to put a picture of a cable on because they just bought it. You see the yacht. It's a bit like advertising for beer and cars. It's about the experience and all that kind of stuff, isn't it?
Absolutely. I couldn't agree more. Yeah, no. Um, so we'll be good when we get started.
Yeah.
Craig, perhaps we could just start just telling, looking backwards a little bit, and tell us a bit about more about your background, how you got into business, and why this particular one for you.
Yeah, well, I mean, it was a long time ago when I started now, of course, but I had the usual path of going to college. Well, I went to school, obviously. Went to school, got loads of O levels relatively easily, and then went to college thinking I'll get loads of A levels relatively easily as well. But I discovered football while I was playing football and started going out and things like that and living, and ended up getting a D and two E's, which meant I was struggling to get into a university really. Anyway, I went through the clearing system, but first of all, I had to choose what I wanted to do, and I was going to do electrical engineering. Well, I originally wanted to be a footballer, but that wasn't going to happen. Then electrical engineering until I started doing physics A level, and I thought, no, that's not for me. So I thought, what else can I do? Something business related, maybe, because it's certainly not anything, engineering related. And I was literally had to make my mind up before putting my forms in. And I got to A, and I literally got to accountancy. I thought, you know what? Everybody's doing business studies. The accountancy syllabus looks similar, but again, it's a bit differentiated. It's different accountancy. Not really heard of it.
Yeah,
So I applied for on accountancy courses. Got through clearing to Liverpool Polytechnic as it was, and then had a great time at uni, but couldn't get an interview because of my A levels
right.
through the milk round. Just couldn't, even though I'd got loads of O levels and whatever, couldn't get on. But then I started actually writing to firms and saying, can I have an interview? And I got interviews. So I got 5 interviews.
Brilliant.
And I must have written about 15 letters, to be honest, which, and so that's not bad, 5 out of 15.
Yep.
Um, got 5 interviews, but I got offered 4 jobs. And the one that didn't offer me a job said I was too. It was only a small. The other ones were large firms. The other one was a small firm. They said I was too much of a risk because if they invested in me and I couldn't pass my exams because I was thick because of my A levels, it'd be a waste of money. Whereas the other 4 offered me a job, and I took. I started at KPMG, and it was great. But what that taught me was it's about relationship. I was going to say it's not what you know, it's who you know. It's not because of that, because I didn't know anyone. But it is about relationship. And they ask a question about what you do. I play football, I do this kind of thing. They realize you're human.
Yep.
They hopefully think you've got a level of intelligence and you'll be able to do the job despite my A levels. So that taught me one thing. If you can get in front of people, it's much
Yes.
better than just showing them, on paper what you can do.
Great.
So I got into KPMG, did the usual thing, doing auditing, did that for 3 years, and then did a bit of what they called special work at the time, which was due diligence and a bit of forensic accounting and a bit of turnaround accounting. But then that was just the start, the infancy of M&A and mergers and acquisitions. There was no department as such, so I just started doing it because our department did it. And then they created departments, and I went into that. So I did that for 10 years. And that was, again, selling small businesses, essentially for business owners. And then after 14 years there, KPMG wanted us to consolidate and work on bigger and bigger transactions, which I'd done 1 or 2, but I didn't really want to do because you're just dealing with directors of companies and it's not their business. And if it
Yeah.
doesn't work, they just get another job. Whereas if you're dealing with a business owner, as you
Yeah.
know, as we've talked about, it's their world. So
Yes.
I left to go to a smaller firm to do exactly that. And then after a couple of years, moved to join some ex-colleagues of mine from KPMG who'd set up a corporate finance boutique called Dow Schofield Watts. And then for another 10 years, help people do SME exits, sales, succession, management buyouts. But it was in 2008 that we decided to set up our first private equity fund because we kept seeing these companies for sale, and we thought actually it'd be great to invest in
Yes.
buy them. So we raised some money from some clients who we'd sold their businesses and said, "Do you think you'd like to,
Brilliant.
help get a return?" So we did that, and we did well. Part of it was judgment. Part of it was luck as well. It was typical. Two did really well, two did okay, and two failed. The
Yep.
two failures were early stage businesses, so that
Yep.
taught us something as well. And then 2014, we raised a further fund, a bigger fund. And we invested in some other small businesses. And we got to 2021, well, 2020, obviously with COVID and all the dynamics that I mentioned before, they started paying dividends because they were businesses that were recession proof.
Yep.
So there were cables were needed to go
Yep.
into delivery vehicles, sealants were needed. The chemical company did hand sanitizer and chain lubricants. Everybody bought a bike
Yep.
and needed some chain lubricants. We had a distributor of screws and nuts and bolts. They sold a year's worth of decking screws in June 2020 because everyone was at home.
Of course. Yeah.
Decking the whole guy.
Absolutely.
So that they did all well. We also have a holiday company that didn't do so well, so we supported that for
Yep.
2 years, and that's doing really well now. But 2021, we were thinking about raising a third fund, but what we realised was, and I alluded to some of this before, these 10-year private equity funds, we couldn't do what we wanted to do. So you get the commitment on day one, and you've got 10 years to invest and realise and give the money back to investors.
Right. Yep.
But first of all, you've got to find the companies, you've got to negotiate with the owner, you've got to then buy the business, headhunt a new MD to transition the owner out. And because a lot of them are quite immature industries, a lot of our growth and value creation is through buying other companies and bolting them on. So
Yep.
you've got to then find those and bolt them on. Before you know it, you're in year 9 and you've run out of time. So we thought, why don't we create a vehicle where, in theory, we can keep businesses forever? Called it PhD Industrial Holdings Limited. And so we sold the 6 businesses into well, 5 at the time, and bought another into PhD to give us as long as we needed to find
Right.
these bolt-on opportunities to create value for our shareholders. So
Yes.
what we've created is like a mini PLC. It's a private company, but we run it like a PLC. So
Yep.
we've got 80 high net worth individuals. We don't pay dividends. The cash that our subsidiaries generate, we throw up to the top company, and we
Yep.
use that cash to buy the next company, the next. So it's a bit like a compounding snowball,
Yep.
effectively. And our shareholders can buy shares between themselves once a year, and then
Nice.
the other way they get money back is when we sell a company or a subgroup, we offer that money back to them as a share buyback, so they can take that money back if
Yep.
they want to. So really, throughout my career, I've kind of not made that many conscious decisions to go. I'm going to go here, there. I'm going to
Yep.
go there. I've been sort of in the right place at the right time where things have happened, and I've gone from audit all the way to running I say to people I've never really had a proper job, but I suppose that my fellow directors do run a company,
Yes.
the holding company, and we have management teams underneath who
Yep.
are really running companies.
Yep.
So we're sort of running, the companies underneath really,
Yes.
or supporting the management teams.
Yeah. Which clearly, you mentioned earlier was helping them get where they want to go
Yeah.
um, fascinating. So looking back over the whole career and especially the holdings business, what are some of the biggest challenges you've had to overcome over time?
That is a good question. I mean, the biggest challenge really was my A levels, which really set me back. But then you've got to use that to your advantage. And again,
Absolutely.
that was part of getting the job actually, saying why that happened and what I'd learned from it, and therefore I've worked harder on my degree. I'm going to pass my accountancy exams. So that was a big challenge really. Um, other, not so much challenges, but learnings, I guess, are working with management teams and making fast decisions. First of all, over the years, we've got better at recruiting. So somebody said to me years ago, this job's easy. All you got to do is find the right company and the right management team. I thought, that's quite easy. Finding the right company is a numbers game. So I look at a
Yep,
thousand companies a year and we
yep,
might buy one or two. So there's more to it than that. But actually bringing a new MD in to a business, they're obviously an unknown factor. I mean, we're really good at assessing finance directors because that's what we do. It's
yes.
hard to assess sales directors because sales directors are really good at selling themselves. And MDs as well are hard to assess. You can do all your psychometric testing, you can do all your referencing you like, but you never quite know what they're like
Yeah,
until they join. And in the past, you know, we what we've learned is if something isn't working and you've got a gut feel, you need to change it,
yeah,
regardless of what kind of personal relationship you built up with somebody. And it's not nice. So we've had to do that on the odd occasion. So that's been the biggest challenge is finding the right MD and therefore the right management
yes.
team.
That makes perfect sense. Interesting to talk about gut. I've talked about gut a couple of times today. The gut instinct. And my belief is I think there's some science behind this, but so our subconsciouses can't communicate directly with our consciousness. The voice in the back of it is not subconscious; it's actually conscious. So our subconscious, so the mechanism it has, if it thinks something wrong, is our gut. It's making us feel a bit funny and and
Yeah,
and and because our subconscious is way more powerful a computer than our conscious, and it's actually scanning, people's behaviors, what they say, how they're acting, and it is just going, this isn't right. But the only
yeah,
communication is our gut, if that makes sense.
yeah, yeah,
And
yeah. No, it does.
and
Yeah,
I think that's what's happening is it, and therefore listening to our gut is absolutely the right thing to do,
yeah,
because it's probably, or at least listening to the fact that it's saying there may be something wrong. There's a warning here. Beware.
yeah, yeah.
Um, but yeah, okay. So finding the right person is really key. Yeah, that makes sense. Any other key learnings about growing a business? Because you've obviously been involved with and seen many businesses grow. Anything else that stands out for you as any of the common tips or you can
Um,
share?
yeah, I guess it's hard to teach and it's hard to get from textbooks and it is through experience, but you do look back and think, I wish we'd done that differently. I wish we'd done that sooner. A lot of it is I wish we'd done something sooner.
Yes.
Um, but also what I think we've got now is a blueprint, which is helped actually by we've recruited. So the four execs are we're all accountants. And really, you need a better blend. So we actually recruited somebody who's been an MD last year, and he's come on board, and he
Oh,
set a
good.
factory up before. He's come on board, and he works a day a week with our management teams. So we're learning from him. He's more process driven than us. And what
Yeah.
we've got is now working with Tom. We think we've got a really good blueprint so that when we buy the next company, we'll be able to start from day one on that blueprint rather
Yeah.
than Tom coming into a business that we've had 3 years. We can involve him before we buy it actually,
Yes.
and during the recruitment of the senior leadership team, and kickstarting the growth plan.
Yeah.
So I think that's the main learning and tip. Get the right person at the right time. And we've quite often brought in resource to help, but it's good having somebody on the inside who we can put into companies.
Yeah, I was going to say, I mean, is that an opportunity to put someone in to run the business at the start and then recruit the manager? It's like run it for a while so you get to understand. Because thinking about it, I mean, certainly my beliefs are around businesses is, we always say that there's often a mismatch in a business between the operational side, the sales and marketing side, and the finance side. Is normally they are strong in one or two of those and weak in one or
Yeah,
two. And it's like, what do you need? So do you need an MD that's more finance led or more sales led or more operational led for that business? If
yeah,
that if that makes sense. Yeah.
Yeah, no.
Cool. And I know you're aware we're a business coaching organisation. I'm keen to know who the best coaches you've worked with, whether that is business, sport, whether it's football, or just life in general. Who's had the biggest impact on you?
Biggest impact, probably my wife actually, because she's a psychotherapist, and a coach, a qualified coach, and a psychotherapist, which is unusual. But and hopefully she'll say I'm her biggest sort of coach as well, going the other way actually, because
Brilliant.
the best decorators often have the worst decorated houses. But
Yes.
she taught me, one or two fundamental things over the years where I've come home and said, "Oh, bloody hell, I can't believe this has happened or that." And she'll say, "Yeah, but there'll be a reason for it," and da 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 da. But one thing she has taught me was just in life general, if somebody does something bad to you, whether they've said something or I don't know, somebody blows the horn at you, whatever in the car, whatever. She said, it's not about you, it's often about them. And you need to say to yourself, what's happened to them to get them to a position where they've got to act like that, which takes away
Yes.
everything from every situation, because you just think, well, it's not me. Rightly or wrongly, it
Uh,
quite possibly could be me, but you just think, well, I wonder what's happened to them, and you
uh,
just sort of think, oh, I feel really sorry for them now.
yeah, I think it's great. It's absolutely brilliant, and bang on. And the thing that a similar thing to that is, I believe, is that people see their own faults in other people.
Yeah, yeah,
And it's the and I would suggest well, without getting political, I think we're seeing a lot of that in the US at the moment, is there?
yeah,
And it really interesting when someone said that to me. I really shocked. That was one of those light bulb moments. As when
yeah,
somebody accuses you of something, they're normally actually just reflecting that's what they would do in that situation.
yeah,
Doesn't mean what we're doing, if that makes sense.
yeah, yeah.
Um,
Like, so that kind of is good for calming yourself down when you think
Oh,
about.
and I always find that as soon as you can get into that positive mindset, it just like everything goes.
Yeah,
And the
incredible.
other benefit is it tends to infuriate the other person even
I
more.
know, I know. If you just
Just
smile and wave.
smile and wave. It's like yeah. And funny enough, I was telling somebody a story a couple of days ago that recalled going back years. I fell into the was doing very well and fell into the trap of I now need trappings that represent that. So I bought my Porsche. It was second hand, but it was it was beautiful. And it was when I started to realize how much of a cost it was going to be. But I was telling my friends last night. I think I was driving down from the A1, which you wouldn't particularly know this, but the A1, and it veers off now from the M1 A1 link, the M62 link, if you like, and straight on the A1. And it was just at that point I ran through the rear tire because you could put yeah the tires are so thick, they're huge that you can feel
Yeah.
most of it, but it was actually wearing on the inside. So I never put so anyway, literally the rim almost completely came off, pulled in, and I'm trying to fix the car because I decided that although I did have AA or whatever, that if the police stop, they're going to go, "Well, you've been driving around on worn tyres." So I was trying to change this in my suit because this is going back pre-COVID. I put my suit on, and trying to change this tyre. And it was quite dangerous because it was this point where the A1 was swinging off. So there was a point where these huge lorries were pointing straight at me for
Mm.
anyway, doing it. But that day, I gave so much pleasure to White Van Man. They were all coming back. I was just great, and I just thought, yeah, if I'm making you
Yeah,
happy because I've had a problem, I'm
yeah,
I'm done. And it was a similar thing.
yeah, yeah.
I
You just
enjoyed. I waved and said,
take
yeah,
it, don't
thank
you?
you, and it was just a wonderful afternoon. Um, so that's a really great point of learning from your wife. Any other favourite quotes or sayings about business or success or life in general that you find
Uh,
yourself using a lot, or you can share?
yeah, well, I mean, the reason why we got here today was through a quote that Joe
Yes,
mentioned on a podcast,
of course
actually,
it was.
one
Yes.
of my favorite ones, which was, if your business is reliant on you, then you've not built a business, you've just built a job.
Yep.
And I see that in, so as I said before, I look at about 1,000 companies a year, and I can see instantly whether it's got a capital value and can be sold, or actually it's just the people. I mean, I saw an information memorandum yesterday, and it was literally, I said to the advisor, "Can you send me an organization chart?" And he said, "Oh, well, no, it's just the two owners. There's no one else." So obviously they've just built themselves a job. Very nice job as far as it lasts, but they can't kind of can't really sell it. So I really like that quote, and that's only something I came across a few months ago, really. And the other one is it's a bit corny, but the more calls you make, the luckier you get. And I think that's all about just getting out there.
Yeah,
And you will, joining the dots. So a classic one is I was asked to go on a panel about non-executives, and it's one of those things where I thought, well, that'd be interesting. I'm not sure what'll come of it, but that's what I've learned. Don't expect anything to come of a networking event. Just go along because it might not be that
yes,
one, it might be the seventh one, but you can't just pick and choose them. So anyway, somebody came up to me and said, "Look, that was really interesting. This is what I do." And as a result of that, we've taken him on as a consultant to help us grow the top line at one of our businesses because
brilliant.
he's got exact experience. Now, if I hadn't have gone to that
Yeah,
working event, I wouldn't have met him. And the only and I'm just trying to think, why was I invited to be on that panel? That's as a result of some of the other stuff I've done. I don't know what it is. And I always say to people, and this is a good example, the best piece of work you get or the best deal or whatever might come from here. And you think, well, oh, I may as well just do that. But actually, it's actually all related to all this other stuff
yeah.
that might have been non-productive over the years. And you can't just pick
No,
that. You've got to do all that to get that. So I don't know if that's a quote. Well, the first bit is a quote, but there's a lot more to it than that.
you just never know, do you? You really
No,
don't
you
know. And I
don't.
think I think the most successful people are those that are just open to the opportunity. I mean, I guess you and I having a
Yeah,
conversation has led to a number of
yeah,
things. It's just you just don't know because it happens, and there's so many stories of that happening with
yeah,
two people meeting and going, "Oh, we should work together," or somebody going to an event and seeing an opportunity. Well, I suppose I don't know how exactly true it is, but the film The Founder about McDonald's was exactly him, him having buying a
yeah,
burger and going, well, hold on a minute, I only just ordered it, and you provided it. Now, if he'd have gone to a different burger joint, it would have been a different
yeah,
story because it needed,
absolutely.
Ray Kroc, that side of things with this systemization that the McDonald's brothers had done to make that happen.
Yeah, because people don't dream up business ideas. It's because they've come across something that they think, actually, wonder why nobody's doing that, or that's a good idea. I'll copy it.
Yes.
I'll do it somewhere else.
Absolutely, it's absolutely fascinating. And any favorite, similarly, any favorite books or podcasts you can recommend?
Uh, Books or podcasts? I'm not a great sort of reader of business books, to be honest. I'm much rather like listening to podcasts like this, learning from other people's real life experience. Because
Yes.
I'm not saying I can inspire anyone, but other people do inspire you. So I'm just trying to think of Alan Smith. There's a guy called Alan Smith, and he interviews people who've set businesses up and sold them, and their stories are often fascinating. And a key theme, of course, I think for not for me, and that's why I don't class myself as an entrepreneur. His is called, I think it's called the bulletproof entrepreneur. And what I've learned through working with entrepreneurs and listening to that podcast and various others is that entrepreneurs are successful because they have to be. They've often come from not very much. They haven't got a life jacket. They've got to succeed. So they've got to work the proverbial 24/7 because nobody else is going to help them. And they'll take risks that you or I might not take.
Yes.
They do. You read about them. Yeah, and I remortgaged my house and I did this and I didn't tell my wife and I did. You and me might not do well. You might, but me might not do that. But though true entrepreneurs will do that. So
Yes.
I do get inspiration listening to those kind of stories. But of course, on the flip side, you only hear about the successful ones. You don't hear about the many people who do that and don't succeed and either
Yeah.
lose everything or just go back to a 9 to 5 job, which I'm a massive proponent of. I mean, there's too many influencers, especially on Twitter, saying, you're a loser if you've got a 9 to 5 job. You should set your own
Oh,
business up. You should do that. I think it's absolute rubbish. You know, get a good 9 to 5 job. Start investing early if you can.
yeah.
and build your wealth slowly that way, and let time and compounding get you to a position where you do have better life choices.
Yeah. Yeah, there's so many different ways to achieve those goals. B, we're not all, I mean, that real entrepreneurial character is quite rare, as you rightly say, that they're willing to put everything on, and yeah, take all the risks that they need to take, and but sometimes burn the bridges. Yeah, it was interesting. I wouldn't particularly class myself as the perfect entrepreneur, but I remember having become a coach with Action Coach. My first, and this is 20 years ago. My first coach that I had at that point, and he didn't know this at the time, but we'd sold the business to become. And that was where I decided I wanted to help other people grow businesses. Done some traveling, started to become coach, he had only two conversations with me about what I was telling him, what all the reasons why I wasn't managing, I wasn't being successful,
Mm,
he said to me, and he didn't know this, but he said, "When does the money run out?"
mm.
And I said, "So," he said, "Well, until the money runs out, that's when you really have to
Yeah,
do what you have to do." And it was really
yeah,
fascinating. And he made me at the time transfer the funds that I had, all the available funds, to my partner. And like literally start from scratch, and that did definitely help.
yeah,
Obviously, they were there, but I wasn't like I came
yeah,
away or anything. But
yeah.
yeah, absolutely fascinating. And some people are not always easy to answer this question, so it's okay if you haven't got an answer. But what would you say you learned about yourself throughout your journey so far, Craig?
Um, Learned about it is a tricky one that. Yeah, I'm sure other people would be able to answer it on my behalf about what they think I've learned. I think what one thing is just to slow down and spend more time planning than doing it. And that happened in a meeting before. Actually, I'm very much right. Let's just do it. Why can't we start today? Why can't we just pick up the phone and get calling some customers? Well, actually, we need to sort out our website. We need to do this. We need to map the market. We need. Okay, that's fine, but there's a happy medium because we don't want to
Yes.
spend 6 months just planning and then starting. Why don't we? Let's agree what's essential and then go to market,
Yep.
and then we can refine. So that's one thing I've learned, which is just to actually don't need to do it today or tomorrow. You, not next year, but like actually let's say we'll go to market in 6 weeks and let's
Yep.
plan accordingly. So that's one learning,
which
really.
is which is really valuable. I would suggest with a lot of the people I've worked, not no, that's not true. I've worked with, but met. I think the biggest challenge for most people is procrastination, not taking action. So
Yeah,
the happy medium is probably the right way to
yeah,
put
but
it.
it's good to work with people who do have the opposite view of no, let's take our time and do this, and then you do get
Yes,
to the medium.
you get the
You need
balance,
both. You
and
need that diversity of thought. Yeah,
I think that's where partnerships really valuable is that differentiation and having different ways of thinking. And going back to you said about most of your partners being in finance and accountancy, most of those are more reserved. The standard
yeah,
behavior, so
yeah,
it's
yeah,
quite good
yeah.
and healthy that you've got that little bit more or that more drive of no, let's get it done. And somewhere in the middle will be the right answer. I would suggest. Um,
Yeah, I suppose I've always wanted to be different, and even yeah, that's probably different within the accountancy profession. Yeah,
Yeah, I mean, I always say 83.5% of accountants are what we call high C. So the analysts, high
yeah, yeah,
accuracy, it's
yeah, yeah,
100, I always say 99% right, still 100% wrong. It's those
yeah,
sorts of behaviors. And we want our accountants in general to do that
yeah,
because we want to
yeah,
get the
yeah.
numbers right. So
We do, we
that's
do.
absolutely.
Yeah, there's definitely accountants and there's accountants. Yeah.
Yes. You remind me of a very quick story of when we were traveling. So I left my business for 18, I say my business at the time. I was an employee, not a director. I came back and became a director owner. When we went traveling, myself and my partner, for 18 months, and money, I got a bit of money put aside. So we went traveling. And in Nepal, we were whitewater rafting, and there was a there was a Kiwi there who he was 26. He was an accountant.
Mm,
And he said, I said, well, why, and he said, I love accountancy. And he said, and I said, oh, I said, why are you here then? Why are you traveling? And he said, in Australia and New Zealand, everyone at this point, this is going back 30 years, and everyone is expected to do what they call an OE, an overseas expedition.
Okay.
It was part of their culture. It's becoming a bit more over here, the gap year, that sort of stuff.
Yeah.
And he said, "But I'm not interested. I just wanted to become a qualified accountant. But every time I went for an interview, they said, well, we'd like to employ you, but you haven't done your OE."
Oh, right. Wow.
So he literally had to do it purely
Yeah.
for the cool. I know he enjoyed it. It wasn't like it was a pain, but it was
Yeah.
really interesting that you
Yeah.
know
You would have
that
chosen to do it.
yeah, and yeah, I think I would suggest even now, if you're an accountant and you did that, you might struggle to get.
Yeah.
Everyone would be telling you that's a bit of risk and all those
Yeah.
sorts of things.
Yeah.
And I think you're familiar with this definition we have of a business, Craig, but I'm keen to know your thoughts. So our definition of a true business in Action Coach, which comes back to your quote actually, is a true business is a commercial profitable enterprise that works without its owners.
Yeah.
And is that something that you going back to your point about being a job? If
Yeah,
you don't, it's a
definitely.
job.
Yeah, definitely. Yeah, absolutely. I see some businesses and they're advertised, and that's fine. But some businesses that are actually advertised for sale, where it's clearly just one person, a consultant, and they're trying to sell their business, but it's not. Somebody
Yeah.
else will have to do it. There's just literally nothing to sell, and it's
Ab-
bizarre.
Absolutely. Yeah, no, it's nuts. And I always say can work without going back to something we
Yeah,
talked
can.
earlier.
You're right. It's
We
can, not
can.
necessarily do. Yeah.
Because if they love and it goes, it's perfect for those sort of 51%
Mm.
sale is that if they love parts of what they do,
Yeah.
then you don't stop, keep doing that.
Yeah.
But let's get you to the point where you spend, as you said, 2 or 3 days a week
Yeah.
doing the 2 or 3 things you really love, you're really good at, and make all
Yeah.
the money, make so much money for the business. So
Yeah. I
absolutely
agree.
perfect. So look, a couple of last questions. Looking forward, what does the future look like for you in the business, and what challenges do you see, if any?
Yeah, no, it's a really good question. My vision is that PhD Industrial Holdings will be around forever. Now, what will change is the shareholders will change.
Great.
Ultimately, they're not,
Yeah.
everyone's getting older. Us, our management team, me including my colleagues, we won't be around forever. None of us will be around forever. And the
Yes.
companies underneath, they'll change over the years as well. We'll sell some, we'll buy some others, but the constant will, we think we've created a really good vehicle that isn't just a collection of assets, but it's an origination model where we've got a way of finding other companies to bring into the group and buy them and grow and this blueprint I talked about. So that's where I see the future. How big it gets and who ultimately will own it, time will tell. What are the challenges? Another good question. I think the challenges will face more and more competition um, because we've spotted this unloved gap of
Yep.
companies of a certain range, and the reason why we're at that range is because there's a lot of people doing larger ones. The smaller ones are harder to do, but I think there will be some new, and we are seeing new entrants, which
Right.
also might push prices up to the point where actually do the returns work.
Yeah.
We've been challenging ourselves about what we do invest in and how can we add value to it? And if it does get too difficult to buy new businesses for the right price, what we can do is just invest in the ones we've got
Yep.
and grow them. So
Yes.
do a buy and build in chemicals and sealants and cables and materials handling. So yeah, but just like a normal, I say never run a business, just like a normal business owner, you've got to be really aware of because of changing times, how business models can change and new
Yeah.
competition can come in. So you can't just say, "Oh, we've got a great model. Um, let's just carry on." You've got to think, well, what's coming around the corner? How can we adapt? Because you just don't know what's coming around the corner. You've got to be agile, haven't you?
I definitely agree with that. I remember a friend telling me a long time ago, and he said that there's a phrase. Well, in fact, there's a book by a guy called Marshall Goldsmith that you may have heard of, but the title, the book's worth reading. The title says always, which is what got us here won't get us there, and that's the title. But a friend of mine said that there's also a very similar phrase that says, if we always do what we always did, we'll always get what we always got.
Yeah.
And he said, look, I've upgraded that. So if we always do what we've always done, we're history. Because as you said, markets change, economies change, and unfortunately, you see your high street brands, Woolworths, Debenhams,
Yeah.
MFI, they've all gone by the wayside because they never changed their model. They just kept
No.
doing the same thing, and so that constant review and change is so important.
Yeah, and that's why we stay away from technology and retail, because AI, AI can completely create us, and it will do. Professional services will completely create them. Whereas our belief is, we own a business that makes caster wheels. Now, yes, there's drones, but we're a long way off getting flying carpets. Things still will need to be moved
Yes,
um,
absolutely,
from A to B on little wheels. Um,
absolutely.
and the same with seal. Things will need sealing. You'll need cleaning product. So we just try and take a low risk approach
Yeah,
rather than investing in the next best thing that we think might work, because we don't.
yeah.
There's other people that do that, and good luck to them. We just like to keep things simple.
Well, I think you mentioned Warren Buffett a long time ago, and he
Yeah,
said
yeah,
he only invests in business he understands.
yeah. So,
So
yeah, yeah,
I think it's just simple, mum, as he describes them, mum and pop
yeah,
businesses,
yeah.
isn't it? That
No, absolutely.
gets what they
Yeah,
do, and
yeah,
it's worked for him. So I'm sure
yeah,
it's a great model to follow. So,
yeah.
final question, Craig: what would be the best advice you'd give an 18-year-old you if you could go back in time and do that?
Um, Well, I suppose the main thing is, don't worry, it'll be okay. It'll all work out
Brilliant.
if you do the right things. And what are the right things? It's not about ability. It's about motivation. It's the simple. This is whether job or whatever or life. Just be presentable, turn up on time, be polite, build relationships, build your network. Um, take pride in what you're doing and don't leave any loose ends. A key thing for me over the years is, if you ask somebody to do something, you don't mind if one, they can't do it or they haven't got time, but they need to tell you so that you can do it yourself or get somebody else to do
Yeah,
it. You don't want somebody just that 9 to 5 mentality. Well, it's 5 o'clock. I'm just going now. Whereas if they'd come to you at 4 o'clock and said, "Look, I'm not going to be able to finish at 5. I need some help," or shall we tell the client or whatever that we can't get back,
brilliant.
have a discussion. I think it's those key things, and none of that is down to technical ability. I think technical ability helps, and you need some elements of it. But I mean, I was chatting to my son's friend at cricket the other day, while we were watching my son, and he's only 25. And I said, "You got a new job, haven't you?" He said, "Yeah, I'm a project manager." And I said, "Well, what do you actually do?" He said, "I literally project manage people and make sure people do things at the right time for a big project." I said, "Wow, that is fascinating. The fact that you can't do any of their roles, but you're effectively managing what they do." And he said, "No, that's exactly right." He said, "But of course, I'm responsible to make sure they are doing that, because if I don't, then I've got to report back, and it's my fault." So he doesn't need that technical ability to do that job, but he needs all those other aspects that I just meant, project
Yes.
management skills, time using your time properly.
I think,
Uh,
I mean, I really believe management. And again, this is, I think I see quite regularly is management is a skill and discipline in itself.
yeah, it is.
And the mistake I see so many people doing is they promote the best person at doing the thing, the technical thing, to become
Mm.
the manager when they, often just let them
Wow.
be good at what they do. Uh,
Yeah, we've seen that time and time again in professional services. The legal profession used to be guilty of that. Now it's changed now, where they've all a lot of them have got CEOs who aren't lawyers, which I really believe in. But the previous model was, you made the senior partner whoever the biggest biller was, because they were the best lawyer.
correct.
That's fine, except two things. One, you're losing your best fee earner. And secondly, they're the worst people managers around, because they're very focused on fee.
100%.
And that happened for years and years, and they finally wised up to, that's not the right thing.
And the thing I saw, which was related to those two things, but the worst thing that happened is if there was any sort of financial issue, the person that's supposed to be running the ship, steering it, and gets back into earning fees because they are
Yeah.
the biggest earner. And it's just
Oh,
like
that's,
understandable, but crazy. You're the guy that should be making sure there's
yeah,
no icebergs ahead, and you're back
guys.
in, pulling
Okay.
up the anchors and things. And it is, yeah, it's a bit nuts. Um, Craig, it's been fascinating talking to you today, and
I've really enjoyed that.
thank you. I'd like to do this, do this again at some point, and just
Yeah,
get
yeah.
some more. very, very important and valuable learnings from the things you've achieved. And so for anyone that's watching that would like to get in touch with you or your business,
Yep.
what's the best way of getting in touch?
The website, so www.phdindustrialholdings.com, and then my contact details are on there.
Brilliant. Well, look, as I say, it'd be great to swing by in the 6 to 12 months and just talk about what things that are going on for you then, but also, as I say, there's been some really amazing learnings today. So I
Yeah,
really thank you for your time.
I enjoyed that. Thank you very much.
Thank you.